Hey everyone, be sure to hit like and subscribe so that you can watch future episodes coming up. So you've decided to take the plunge. You're going to go navigate health insurance and find better coverage for you and your family, maybe your business. Here's the thing. It's not a consumer-friendly industry, and that's why a trusted health insurance agent is so vital to your experience in finding better health insurance. You're going to see a term called deductibles. And you're going to see a crazy wide range, anywhere from $0 deductible for individual plans to several thousands of dollars in deductibles. You're going to see out-of-pocket maximum limits. Sometimes these are thousands of dollars. Sometimes they can be tens of thousands of dollars. And there might even be multiples of that if you've got family members that you're looking to add to the plan. You may see copays, and the copays can be some of the most complicated things to understand because it could be a copay different for a doctor's visit, for a specialist visit, for an ER. Each one of those could have its own type of copay and an amount associated with it. And then you're going to have what's called a coinsurance rate. So in between your deductible and your out-of-pocket maximum limit is this concept of coinsurance, where you and the insurance company split the cost of your care once you reach your deductible. And you may see 100%, you may see 90-10, 80-20, 70-30, 60-40, or maybe even 50-50. What does all this mean? Well, that's what I wanted to talk about today. So let's talk about deductibles. A lot of people understand how deductibles work because it's a common concept in all of insurance. With your car, for example, you may have a $500 deductible should you get into an accident. And you know you have to pay $500 before the insurance company will pay to repair your car. Well, in health insurance, it's the same way. Oftentimes, though, you've got several thousands of dollars in a deductible that you must pay. So any care that you get, with the exception of a few, will require that you pay into a deductible. Basically, you are cash paying for any healthcare needs you have up until the point at which you reach your deductible. With these high deductible plans nowadays, people are functionally uninsured because they never reach their deductible level, but yet they are paying for a high deductible plan with a very costly premium. Now, once you reach your deductible, the next limit that you're going to need to reach is your out-of-pocket maximum limit. This is typically several thousands of dollars, could be tens of thousands of dollars. And you're going to reach that at a coinsurance rate. So what that means is between the deductible level and the out-of-pocket maximum, you're sharing the cost of your health care with the insurance company. So for example, if you've got a 90-10 plan, then that means you're sharing 90%, or I'm sorry, 10% of the care related to your healthcare needs. The insurance company is paying the other 90. The lower you go down in that ratio, the more burden that's being put on you, and typically your premium is going to come down lower. So what typically you see in these high deductible plans is, yes, they can bring the premiums down really low, but they've got high deductibles and then coinsurance rates where you're sharing a lot of the cost, reaching your out-of-pocket maximum. The other charge that you're going to have is copay. This is the copayment that you are going to make at the time of care. And then after that, the insurance company will decide, is it going to pay anything or not? It depends on whether you've met your deductible, whether you've met your out-of-pocket limits or not. And regardless, so that copay amount is 100% on you. That is not you sharing the cost of anything with the insurance company. Typically, they're kind of nominal, anywhere from like $35 to maybe $50 for a doctor's visit. They can be much more, into the hundreds of dollars for an ER visit. So The last piece, of course, you understand, is the premium. This is the monthly amount that you pay each and every month to have the health insurance that you are enrolled in. And so your deductible, your out-of-pocket maximum limit, your copays, and then your premium all add up to the real cost of your health insurance. And so one of the things to think about is how much will you likely use health insurance within a year? Because all of these limits change over at the beginning of the year, meaning everything restarts. So if you're a pretty healthy individual and you never see the doctor other than for your annual preventative exam, then a high deductible plan with a low cost may make a lot of sense. When you look at those plans, you can think of them as more of a catastrophic type plan, meaning if the worst thing should happen to you, an accident or a terrible diagnosis, you may be out several thousands of dollars, but you'll receive coverage after your out-of-pocket limits are maxed. The other thing to consider is with underwritten plans, you can actually change the game in this healthcare industry. You can change it in your favor. And that's what I talk about in my video where I talk about how the healthcare system is rigged against you. These underwritten plans recognize that you don't go see the doctor very often, that you're a fairly healthy individual. And so they lower the cost, the premiums, which is one of those factors that I talked about. And a lot of these underwritten plans are what's known as first dollar benefit plans. And I'm going to talk about that later because the concept of a first dollar benefit isn't something that we understand in this consumer space, because we're all conditioned to know that we pay before the insurance company does. And these first dollar benefit plans, actually the insurance company pays before you do. What a novel idea. Well, if you can lower your premium, then, and you're not going to be seeing the doctor anyways throughout the year, a properly structured underwritten plan can actually lower your costs because we can make sure your core medical needs are taken care of. And then we can structure in policies that are going to take care of you for the catastrophic. And because they're specific to catastrophic, they're typically much lower in price than you would think. To find out how to rig the game in your favor, just go to insuremesteve.us/rigged and check out my video. If you want to talk with me, I'm happy to do so. You can just go to meetstevestump.com, put a comment down below. I'm happy to I'm happy to talk back and forth through the comments. And I hope you found this valuable. If you just simply want some help understanding what your plans are and how they all stack up, send me over what you got and I'll take a look at them and give you my opinion on how they all compare to one another. I hope this was helpful. My name is Steve Stump. Be sure to hit subscribe and like so that you can watch future videos. Thank you very much.